We are on the brink of a major Bitcoin S-curve adoption. Bitcoin's price has been moving in a major way the last couple of days, going from 51K and sitting at $60,000 over the last 3 days. As we're accelerating towards a major death spiral, joining us today is CJ Constantino. CJ is one of the most clear and concise speakers on Bitcoin being the reserve asset of the internet and Bitcoin being the most pristine form of collateral. CJ, man, it's such a pleasure. Bitcoin's been absolutely pumping the last week. This death spiral, what is it? And are we accelerating towards a major crisis at the minute, mate?
Good day, mate. Thanks for having me. Great to be here. It's crazy to see where we are right now because the Fed and the governments are really stuck. The system that's been working for them, it can't work now. And what's different now? People say, well, this has been going on forever. We can kick the can. The problem with kicking the can is we have now reached that point where something is different now than it was before. And what's different is $34 trillion of debt in the United States, another $211 trillion of unfunded liability. And this just isn't a sickness or disease in the United States. This deficit spending, this inflation, this way of governments to print money and steal wealth from their people has been abused all over the world. And that's why people are rallying behind Bitcoin, because they can feel the pain, right? The central banks are supposed to be fighting inflation. The data makes it look pretty, but reality, the life that we live, the prices we have to pay, it doesn't match their reality. It's a different reality. And when you come to the real reality, the reality of people who have to go and shop for their groceries rather than pay somebody else to do it, when you're living real life and you're paying these prices and you're seeing it and you're feeling it on your earnings, prices are going up, wages are going down. If your wages are going up, they're not going up as fast as prices are going up. The government has to print more money. There is no way out of this. And if they raise interest rates, here's the death spiral. They raise interest rates to fight inflation. Because now we have to roll over $34 trillion of debt at 5% instead of 1%. Now we have to finance $211 trillion of unfunded liabilities at 5 or 6 or 4% instead of 0.25%. It's common sense. It's basic math. It requires more money printing when interest rates are higher and you have large burdens of debt. Back in the old days, when Voeckler brought those rates up to the highest they've ever been, they did not have large amounts of debt. The burden of interest payments did not contribute to the amount of inflation that created positive price pressure that outweighed the negative price pressure that we see from the supply-demand equilibrium, what they call demand destruction. And all these things are happening today while people kind of just sit back hoping that everything's going to be okay. But if you look at the math, if you look at the numbers, the United States Congressional Budget Office, their own office projections that the public will hold $200 trillion of debt by 2053. There is no plan to slow down spending. The Federal Reserve is supposed to raise interest rates. What's supposed to happen is people are supposed to back off. The rates go up, money becomes expensive, things become tighter, people borrow less. Bad news, guys. Credit's at all-time high. Household credit's at all-time high. Government credit's at all-time high. And if they raise rates, they'll slow down a $1 trillion of credit spending? Well, the government's spending $3 trillion a year in credit spending. So it doesn't matter if you kill the economy, you can destroy the economy and create the most amount of demand destruction as possible, except for basic essentials like food and water. And even then, it'll still be like it was in Venezuela or Argentina. Even then, the prices will continue to go up because the source of inflation is the devaluation of the currency. The source of inflation is the deficit spending that dilutes the purchasing power of the currency. It's not the economy. You can punish the economy for the sins of the government budget, but it will never create justice. It will never balance anything. And we are looking this death spiral right in the eyes.
So what's the end game of the death spiral? Like, what's the final moment of it and sort of the time frame? Does everything implode? We get rid of the dollars as a reserve asset? Do they bring in CBDCs? Like, what's the next stage? Because it's all going down everywhere around the world. Our currency, we've already hit all-time highs here with Bitcoin. We've lost about 13% against the US dollar. The dollar's lost about 20% since 2001 in purchasing power. So we can see that trend, that's hyperinflation happening at a steady pace, I believe. But what happens in those final moments, just overnight do we wake up and everything is different, or is this a slow, steady step towards hyper Bitcoinization, I guess, is maybe our belief? What would you think on this one, CJ?
Yeah, that's a great question. And I think it's a little bit of both, actually, because you start to see a little bit of an acceleration as we'll move forward. And Snowden sent out a tweet the other day, and he was like, I'm predicting that this year governments are going to come out and say that they're accumulating Bitcoin, right? So now that can bring us to the next level. But what I've always said this, and in my studies of all these economies that have gone into hyperinflation, I mean, hundreds of fiat currencies there's never been one that's been successful ever. So you can learn a lot of lessons from going back and studying the history of fiat currency and the failures. But what I've noticed is there's no mathematical point at which inflation turns into hyperinflation. The difference between inflation and hyperinflation is trust. So when people lose that trust, that's when it's really going to start to accelerate. I do think Snowden made a great point, though, and eventually governments, before trust is lost, governments will have to openly admit that they are buying Bitcoin. And once governments get to the level where it's like, hey, we're printing our worthless currency, we're taking your future tax revenues and we're buying Bitcoin with it. Because what that means is that we know that the value of those future tax revenues is nothing. And we want to make the equity balance, the equity value of our balance sheet increase. Well, you don't do that by adding liabilities. You do it by adding assets. So they print the liability, buy the asset, and you'll see the same thing that's happening with Michael Saylor and MicroStrategy happen to governments, except Michael Saylor is constrained by his balance sheet. He's constrained by how much institutional grade debt that he can issue, right? So when he dilutes shareholders, yes, in dollar terms, but it's probably worth more Bitcoin because he takes what he dilutes with and buys the Bitcoin. Governments don't have to wait for that equity value to go up. They can just continue to print at a rapid pace and accumulate Bitcoin. So I think we're going to continue to lose trust. You and I both strongly believe governments are doing a great job to gain our trust.
Fantastic,
right?
man.
I mean, the politicians, there's no one. I trust my kids with these politicians. You know, they're just so great. So they're doing the best they can to keep trust around. Meanwhile, Snowden brings up game theory, and I think there's going to be a little bit of both. But once governments have to come out and admit the only way we can conserve the purchasing power of our people in order to protect you, we must print our money and buy Bitcoin. And once they finally have to admit it, like Jamie Dimon has to admit it, right? It's a scam. Now he's offering it to his customers. Are you scamming your customers, Jamie? No. See, he knows his business model is disappearing. That's why for the first time, he's selling his stock. He sees what's happening, but he don't want to tell you.
Just on that, him selling his stock, 115 million, I believe. Do you reckon he's buying Bitcoin?
Ooh, that wouldn't surprise me. No. If he came out and said, I'm not buying Bitcoin, then I would say, yeah, he's buying Bitcoin. Since he hasn't said anything, I don't know. Maybe he's financing some drug traffickers or something. You know, just trying to
money launderers.
Yeah, you know, those guys he banks all the time and pays billions of dollars of fines to bank. Those, you know,
well, he'd leave his money in the bank if he was going to do that. Maybe he's changing his tune.
That's right. But we see it happening, and he's not the only one. Other big executives, and I think the Bitcoin ETF plays a big role in that. I wouldn't be surprised if there absolutely was a percentage allocation of Jamie's sales, of Elon's sales, of Bezos's sales going directly into Bitcoin through these ETFs.
Yeah. Bezos obviously hanging out with Michael Saylor and stuff. It's pretty likely that Michael Saylor would be like, come on, man, like, wake up. There'd be no reason for Jeff Bezos not to. And here on the show, I speculate all the time. Jamie may not be buying it, but maybe his wife is, or maybe a trust is buying it, or we know his daughter used to hold Bitcoin. It wouldn't surprise me if his daughter's 2 Bitcoin is now, you know, 100 or 1,000 Bitcoin or whatever it is. And Jamie's like, nah, I don't own it. I just keep gifting my daughter money, and she does as she pleases.
That's how these guys work. We're outside of the loop and they're inside the loop. For the first time, maybe ever, regular people have a chance to front run the institutions. Now, if you didn't listen to people like Sean and myself screaming and slamming the table that you should be buying because FTX is collapsing and Bitcoin's going to zero, and people are calling me scared, and I'm telling them, throw everything you got at it. Throw every single thing you got at it, because it's just emotion right now. It has nothing to do with fair value, nothing to do with the economics of Bitcoin. And look where we are today. So we see all of this coming forward. It's coming to fruition. It's accelerating. And this very well could be the cycle that trust is lost. My thesis is Bitcoin will continue to trade at commodity value. It will continue to trade at a price relative to its cost of production until we move up this S curve of adoption. And once we get full on adoption, once the governments are forced to admit for the goodwill of their own people, they have to print money and buy Bitcoin, then we'll move to monetary value, which is global GDP divided by 21 million.
Yep. I've been messaging Australia's Prime Minister, both in public tweets and in DMs. Trolling, not trolling. He's obviously the head honcho of this glorious place. Respect or not, we'll keep that out of the conversation. But just saying, why are you not buying Bitcoin? Why is the RBA not putting Bitcoin on the balance sheet? What is stopping you? Who's telling you not to do it? They've got this agenda everywhere around the world, sustainable, green energy. I don't believe it's sustainable or green. I think that's just a total psyop. However, if they want to go ahead, they should incentivize Bitcoin miners and have that going back into the RBA, the Australian Treasury. There's no reason, or we've got all the space. Everywhere should just have nuclear, in my opinion, and we can just run Bitcoin miners. But did you see, I just saw it last night as I was heading to bed when I shouldn't have been on my phone. Looked like Oman had bought like $500 million worth of Bitcoin miners, and they're starting to ramp that up. Did you see that?
I did not see that news. That's big news, considering the growth of the hash rate. The hash rate has been exploding. I mean parabolic explosions, and price drives hash rate, because when price goes above cost, that creates profit. Miners take that profit and they reinvest. But now with these public mining companies, even if they're unprofitable, they can still raise money and invest. So we're starting to see go to new levels. Also, there's been 3 or 4 different countries that have come out and admitted that they're mining Bitcoin as well. And I'm sure there's some others that are mining that don't admit it. So the hash rate growth is pushing up difficulty. Difficulty is pushing up cost. And what Bitcoin has been demonstrating to everybody is that through its engineered design, it is the only asset in the world that can raise its marginal cost of production. It's the only asset in the world that can raise its own floor price through the difficulty adjustment. It now can lower it too for sustainability. You want to talk about sustainability? Bitcoin has a built-in sustainability mechanism. And all of that ties into what you said with this green. If they were true, Bitcoin is the only incentivized network in the world that can promote energy technology. Everything else is like, oh, there's energy demand, we'll harness it and we'll sell it to you. Bitcoin comes in and says, how do we create this energy for cheaper? Right? It's the true motivator. It takes existing energies and makes them more efficient. It balances the grid. But because Bitcoin miners are incentivized to find the lowest costs of production and to capture wasted energy, we're seeing Bitcoin play a bigger role in being green and sustainable than any idea that these people have ever come up with.
Yep. With Bitcoin, well, the banking crisis that happened last year, Silicon Valley Bank, Signature Bank, are we going to see more of that? And is Bitcoin accelerating that, or it's already accelerating by itself and Bitcoin's just that flight to safety? Or is it going to, maybe do we get to that inflection point where people just try jump ship? Like, we've got controls here. You're only allowed to move across $10,000 a month into crypto, they say, quote unquote. Like, it sounds like they're trying to stop that flight because they can see potentially that we've got more bank failures and they don't want people to have that instant bank run. Do you think that's happening or going to happen more?
That's not even a guess. That is 100,000% happening. All you have to do is look at the bank's balance sheets. They're public companies. You can go check it out. Look at their balance sheet. Every single bank is underwater. Every single bank has assets less than liabilities. That means if everybody today decided, I want my money from the bank and I want it now, there's not enough money there. It doesn't exist. That's really the perfect moment we could have had deflation. And I think this argument ties into the deflation argument, because you hear a lot of people saying the economy's slowing down, and they're right, it is. And we're trying to figure out why prices aren't coming down too, right? Because the economy comes down, prices are supposed to come down too. But they're not, because they're still abusing the printer. The higher interest rates are not incentivizing the governments to print less. They don't care. They're continuing to print more. And as high as those rates go, it doesn't matter. They still won't stop borrowing. They're always going to borrow and spend. They're going to continue to dilute the money. And then that creates this scenario where it's like, whoa, interest rates keep going up. The higher the interest rate goes up, the less the bond is worth, right? All of these banks, especially in the United States, when the Federal Reserve came out and said the federal fund effective target range is 0 to 0.25%, well, the banks had to pay interest to their depositors. So they have to go out the yield curve. They move from the repo window and from overnights and from T-bills out to notes and bonds because they had to get to the yield, right? Because the federal effective rate was 0, T-bills were less than 1, and now you go out to notes and bonds, you can get 2 to 3. So they went all the way out the yield curve to get that 3% yield because it's risk-free. But then they had to raise interest rates. So now they're holding all these bonds with interest rates being raised at the fastest clip in history in percentage terms. So the banks lost equity value on their balance sheet at the fastest clip in history. And that's what really sparked the bank run. But it's like that late night commercial where the water's leaking out and he takes the spray and he sprays it up and he's like slaps it on, right? We got to stop this leak. And that's what the bank term funding program was. The bank term funding program was, hey, we know you bought 30-year bonds from us and we know that you need the money, but you can't get it because the market value isn't there. So bring it to us and we'll value it at par. Even though you bought $1 billion worth, it's only worth 700 million. We'll let you borrow it against it at $1 billion worth. So they have to finagle the rules. They have to change the rules, even just to sustain the system, right? And then if they weren't going to sustain the system, they would have did it last March. If we were going into some deflationary thing or some super depression, like Jamie Dimon selling his stock because everything's going to crash down, he's going to buy cheaper things. No, his business model is breaking down. He's Xing. He's taking his profits for the first time. What's happening is all of that equity value is being destroyed. And ultimately, it's our value. It's the value of we, the people. When the banks go bankrupt, they're bailing us out because they took our money and lost it. They took our money and put it in what was classified as risk-free and ended up being high risk. And the risk that remains, because people still classify this as risk-free. I mean, it's crazy. The risk that remains is people know I'm going to get paid my money. If I lend money to the government, I'm going to get my money. Yes, you are going to get your money because they have a printer. There is no case scenario where you're not going to get your money. The risk is, what the hell are you going to be able to buy when you get your money? And that, I think, is what's sparking this transition. That's what's sparking this funds flow, because people are realizing, oh my God, the more that this goes on, this higher for longer. Yield curve's been inverted for the longest time in history, 10-year, 3-month. What the market is signaling to us is they don't believe the Fed, but they don't believe the Fed in the wrong direction. The Fed is saying inflation is not a problem. Don't worry about it. The real issue is that inflation is a problem. It's not transitory. It's sticky, and they can't fight it by raising interest rates because of the dynamics we spoke about earlier. The smart money, right, is buying the bonds and signaling to us that, well, the Fed's wrong, but they're not wrong because inflation is going to stick around. They're wrong because we're going to have deflation. But if we were going to have deflation, we would have had it in March. There's no better way to create deflation than to let a bank collapse and let all of that fake credit destroy itself. Because when that credit is destroyed, the money supply contracts, and that is the definition of deflation. But they put that Band-Aid on it. They slap that rubber seal on it because they can't let it break down, especially now in the United States in an election year. So all these elements come together, and it's not just like one thing, like, oh, I'm leaving for Bitcoin. I think people are actually seeing more risk. They're starting to see that risk-free doesn't mean risk-free. Because look, if you've been earning 4 and 5% for the last couple of years, you'd think to yourself, oh, I'm going to be in good shape. I can buy more stuff. But you can't. You're buying less stuff still. So when people are, this risk-free government lending paradigm is going to break down, not because people don't get paid, but because when people do get paid, they're not going to be able to buy anywhere near what they thought they were going to be able to buy.
Man, you're on fire. With the elections coming up this year, you just throw it out there. With the elections coming up, do you think they are going to drop the interest rates and start the money printing, or they're just going to keep printing money and leave the interest rates high, or even raise them? What do you think is likely, I guess, as we move into the later half of 2024?
Yeah, that's a $1 billion question right there. But so here's the thing. Because of the election, I do think they're going to start to lower the rate.
Yeah.
But People need to understand the Federal Reserve doesn't control the entire yield curve. They only control the federal funds effective rate. That is like the very front end. That is like the overnight rate. So that's the rate that they control. And then the reason that becomes an anchor rate is because the people who have a access to the repo window and discount window, like broker dealers and primary dealers, they have the ability to buy those 3 months and then borrow against them at that window and arbitrage the difference in profit. So the Fed can lower rates and you can see the 3-month treasury bill come down with it. But there's no guarantee that any of the notes or bonds are going to follow down. Those are free market rates that can only really be controlled through yield curve control. So the government can control those rates by not selling, or I should say not issuing or issuing extra. But other than that, and Federal Open Market Committee actions of actually buying and selling, performing real world yield curve control, there's no way to control those rates. So even if the Fed lowers rates, I don't expect the 10-year to come down, which means I don't expect the prime rate to come down that much either. So if people are waiting for these lower interest rates because that's going to fix everything, the Fed is going to be forced to lower interest rates, but it's not going to fix anything. The one good thing is that at least the government will be able to continue to print money and pay less inflation price, right? The interest on the debt will go lower. So we'll actually have less inflationary pressure as long as they continue to issue the T-bills, the short terms. But if they issue on the long end of the curve to try to push the rates down, that's yield curve control. Well, look no further than Japan to see how much money you have to print or how many issuances you have to make in order to start doing this to hit your target rates. I think the Fed is losing control of the yield curve control. And the most important thing I'll say here today, and what I've said in the last couple of months, that nobody except Max Kaiser is picking up on this. Thank you, Max. Shout out to you, Max. You're a real OG. The Fed has lost the ability to raise real interest rates, right? So when you're saving, anybody, typically only the big players do this, but even if you're a small player, you should be caring about your real interest rate, not the nominal rate. The nominal rate is the rate that's written on the bill, right? You can get 5%. And the government says that the inflation rate is 3%, right? So if you take 5% and you gain 5% purchasing power, but then prices go up 3%, so you lose 3% purchasing power, what does that net out to? Well, 5 minus 3 is 2%. Okay, so even though my nominal rate of return is 5%, my real rate of return is only 2%. Well, that's fine and dandy, but I got bad news for you. The inflation rate is not 3%. When you go back to the 1980s equation based on the cost of goods index, that's the government equation, right? They paid for it. They financed it. It's their equation without the manipulations, without the hedonics. Inflation is 10%. So 10% minus 5% is negative 5%. You're not going to be able to buy as much. But here's my point. When they keep printing the money, the inflation rate goes up. So as the inflation rate goes up, so let's say real rates stay at 5%, but inflation goes up to 4%. And then let's say they raise, the real rate is going more negative, right? Because 5 minus 4 is now 1%. You're losing in real terms. But now let's say they raise the rate to 6%. But because of the exponential growth in interest payments, the inflation rate goes to 7%. Even the official government inflation rate goes to 7%. Well, 6 minus 7 is negative 1. So the Fed cannot raise nominal interest rates in order to raise real rates. And that is the biggest piece of news in macro finance that nobody is talking about. They have lost the ability to raise real interest rates. And that should be the final bell and an alarm going off for people that they have lost control and that the time is near.
Yep. I'd like to go a little bit deeper, but first I just want to ask you, you've been in Bitcoin for about 9 years, 2014. You started mine in 2016. Before we went live, I'd watched one of your videos, and I'm going to do the audience a massive favor and put your YouTube below as well as your Twitter. Those videos on your YouTube, you've got all the interviews and stuff there. Absolutely amazing. But there's this one video where you're giving a sermon and you're talking about God and Bitcoin and being the truth, money. Would you just be able to expand a little bit of, now you've talked about in the other videos, but your journey to Bitcoin and a little bit about who you are as a person, CJ?
Yeah, absolutely. So the first thing I'd like to do is give all glory to God, Jesus Christ, my Lord and Savior. I have a community of people behind me that pray for me, and I pray and study daily for wisdom, understanding, and discernment. So a lot of people, say some nice things, and that's great. But I believe if you put your head down and you pray, the Holy Spirit will give you wisdom, understanding, and discernment for what you want to know. And for me, it just happened to be about Bitcoin and finance and what's happening. So I truly believe there is a spiritual aspect to Bitcoin because it's based on truth, and Jesus is truth. So there's a truth money, and that's what I talk about in there. And Jesus said you should love your neighbor as you love yourself. And even if you're not saved, everybody agrees with that idea. You should treat others how you want to be treated. Well, when you're saving in a fiat currency, when you're saving in a government currency, what you're doing is you're allowing the government to steal from your neighbor and from yourself. So that's not loving your neighbor as you love yourself. You wouldn't let your neighbor steal from your other neighbor, or your son steal from your daughter. You would protect, you would have truth and justice. That's the type of foundation that can stand. But a foundation against itself will crumble and fall. These are all truths that are found in the Word of God, that are found in the Scriptures, and everybody across the whole world can come together across these truths and understand that Bitcoin is there for the betterment of humanity. A lot of people think, oh, its number go up. These guys are greedy. These guys are drug traffickers, all this other stuff. Actually, most of the Bitcoiners I meet are very truth oriented. They're very justice oriented.
Incredibly.
They want justice. They want truth, and they're sick of being lied to. And that's what Bitcoin is. Bitcoin is truth money. It's money that cannot be lied about and manipulated like our state-sponsored fiat currencies. And I think it ties directly in to the second coming of the Lord Jesus, and truth being the center of earth, not lies and a breaking foundation. That's why this world is breaking down, because it's based on lies. And the truth is where you can build and continue and succeed. And Bitcoin is that equity foundation, specifically in finance. It's the equity-based foundation, the counterpoint to what would be like the Antichrist, which is the debt-based foundation, right? It promises you equity. It promises you growth. It promises you cash flow and produces none of it. Whereas with Bitcoin, it promises you and it produces because it's proof of work. It's proof of yesterday's hard work, not the empty promise of tomorrow's work that isn't completed.
Yeah, man, I totally agree. I feel like it's this fight between good and evil, and truth will always win. But I think the closer we get to winning that final stage, they're going to get louder, they're getting noisier, but I think we'll win. Talking about, I guess, light and darkness, Craig Wright versus Copa trial, what do you think would happen if, I'm not saying he is, ladies and gentlemen, chill, but what would happen to Bitcoin if he wins in a hypothetical, random, dice-rolled world?
That's really hard, because if you've been following along, it's, Satoshi, if Satoshi wanted to be known and collect royalties, then he would have already been known and been collecting royalties. So
it's very clear it's not Ninja Man. We all know that. But some miracle of work of the devil or whatever happens, what do you think would happen to Bitcoin if he did?
Well, if he won, I think that the Bitcoin community itself would still keep its nodes on Bitcoin Core. I don't think any of us would say, hey, well, I guess he's Satoshi, so I'm gonna signal that he's the longest chain now. Like, no, man, you broke away from your own idea, right? You broke your own ideas. You broke what made Bitcoin, and now you're starting a new thing. It'd be like Mark Zuckerberg, like leaving Facebook and starting like Face Scan, because it's like a new, Facebook isn't the real Facebook. Like, no, you created something and now you're creating something different. So if you did create something and you created it right, and now you want something new that's wrong, it doesn't make you right. It just makes you someone that's wrong. And what's great about Bitcoin is that it doesn't care what you think. That's what's so great about it. Run your node and tell us what you think, and we'll let you know what we think. And that's how it works. So that's what's so beautiful about Bitcoin. Bitcoin's not going to care whether he's Satoshi or not, because humans are emotional, right? Humans are volatile. And just because a human has a good idea on one day doesn't mean they're going to come up with a good idea the next day. And Satoshi's not immune to that. So I respect Satoshi's vision and Satoshi's. I don't mean I said that. I don't mean Bitcoin Satoshi vision. I don't respect BSV. I respect the original Satoshi's vision
How funny.
for what Bitcoin is and what it means for the world. And my node will always be signaling that chain, never a fork of it.
Amen to that. As we come in and land the plane, you've got some incredible tweets. Don't have the time to go through them, unfortunately, but you're very active. What would you want to depart with people? Where should people be paying attention? The S-curve of Bitcoin adoption, like Bitcoin's pumped, man. 10K in the last couple of days, but it's actually nothing. Like Google trends are down. There's no retail here. A couple of people in person have asked me, are you still into that Bitcoin thing? I'm like, yeah. And they ask about it and the price. I said, yeah, cool. Like, it is what it is. One Bitcoin's one Bitcoin. But I'm like, have you read that book yet that I gave you like 3 months ago? And they're like, no. I'm like, you probably should. And then I'll just keep going on. But I haven't received any of those texts, any of those phone calls yet. It doesn't feel like it did last cycle, like far from. Like I tweeted yesterday, it feels like December 2020. Like right, the 1st of December, right before that parabolic rally. But we're before the halving, man. Like, what do you sort of see happening? And yeah, over to you. The floor is yours. But what would you like people to take away from their precious moments here? And shout out to everyone that is watching. Smash the like for CJ and share the video. The floor is yours, my man.
Yeah, so that's a really hard question. The first thing I would do is check out my Twitter, check out my YouTube, look at my highlights on my Twitter page, check out my orange pills on YouTube, comment, ask questions. I'll do the best I can to interact with you and help you figure things out and get some orange pills that are actually going to wake up family members, because education is everything. So we need to get people educated. And that's part of me kind of doxing myself and coming out is, help people understand now's the time. Like I've been saying this for a long time, and people, I've been saying this when inflation was 2% and nobody even knew what it was, right? Before it was even in the news, and people are like, dude, like what's inflation and who cares, right? But now it's like, hey, they already sent out helicopter money. They literally printed money and sent it to us. We're at the stage where people need to be paying attention. So check all that stuff out on Twitter and YouTube and share it with your friends and family so that they can wake up. Now, as far as where I think we need to pay the most attention to, I recently sent out a tweet. It's so funny because I'll send out a tweet and I'll be like, oh, that's not going to do that good. And it gets quoted in Forbes, right? And then I send out a tweet. I'm like, that's the best tweet I ever wrote. And it only gets like a few thousand views.
Yeah,
I can't figure it out. But the most recent tweet I wrote about Bitcoin price versus value versus cost, I think
that was a really good, yeah, I'll bring it up.
This is a really important concept for people to understand because there's a little bit of confusion about how free market price discovery works. And if you read this tweet, what you'll find out is, yeah, the value of Bitcoin is the value proposition. The value proposition is money, right? Bitcoin's not trying to be anything except money. And that's all it needs to be. And because it is money, the perfect money, arguably the first discovery of money, the value proposition of that money is global GDP divided by 21 million. Now, the price just simply means the market price. And the cost is the proof of work cost of production. And a lot of people get confused when I say this because they're like, no, just because something costs something doesn't mean it creates value. Yes, you're correct. You're absolutely correct. It's the natural law of economics that value creates costs and profit. And then it's the invisible hand of the free market. It's the incentives of profit that drive the economy, that make the invisible hand work. So as the price of Bitcoin goes above its cost, that creates profit. When you have profit, miners want to invest that profit in hash rate and generate more profit. So when the price is doing like it is now, you create profit opportunity, and profit opportunity expands hash rate. Expanding hash rate increases difficulty. Increasing difficulty increases costs. So Bitcoin is the only asset in the world. And Jeff Booth does a really good job of explaining this on the TradFi side, which is most of the time costs are going down, not up, because of technology and ingenuity and mass production. There's a lot for most reasons, the cost of production goes down. So they're not only stealing through us through inflation, but prices should be going down. And if you think about the natural laws of economics, when prices go down, demand goes up. So you would think, oh, producers don't want prices to go down. No, producers do want prices to go down. It's cheaper to create 1 million water bottles instead of 100,000 water bottles. And when you sell those water bottles for 80 cents instead of $1, you'll still make more money because you sold 1 million units instead of 100,000 units. That's a definition of a healthy economy. Demand creating positive price pressure, which creates profit, which is reinvested into supply, which lowers marginal cost production, lowers front end facing price, increases demand, and increases overall profit and velocity. That is the definition of a healthy economy. We're not seeing that. We're seeing the opposite of that. The Federal Reserve is trying to create demand destruction, and they're bringing higher prices from the currency side of the equation, higher prices from inflation, from a devaluation of the currency and dilution of purchasing power. That has nothing to do with the economy. We need economic inflation. We need the economic positive price pressure from supply demand equilibriums, making producers more profitable. Bitcoin is the perfect example of how this should work. And it was engineered, it was strategically designed with the halving and the difficulty adjustment to be savings technology, to empower we, the people who buy and hold. Because over time, what happens is, since the value proposition of money is global GDP divided by 21 million, yeah, we understand the price isn't there yet, right? It's like gold. A lot of people buy gold and they're like, well, yeah, the price of gold should be $50,000 an ounce. Yeah, but that's the monetary value of gold, right? Gold is not attached to the monetary system anymore. So if gold was money, it'd be 50, but it's not. It's a commodity. The dentist is using it. The jeweler is using it. So where is the price? Slightly above its cost of production. Bitcoin's the same thing. It's not money yet. It's still trading in its commodity cycle. It's still trading at its price relative to its cost. We're at the beginning of the S-curve adoption. When we get to the top of that S-curve adoption, then we'll be at monetary value. But in the meantime, how can we describe what's happening through price discovery? It's a commodity cycle. Price will be at fair value, at premiums, and at discounts. And you should act accordingly through those cycles in order to end up with the most amount of sats at the end of it.
Yep. What everyone should do that is watching this video is I'll link your YouTube, and I think some of the interviews when you went on with Nico and you're talking about the fair value of Bitcoin and being above and below. They're incredible videos to much watch. Yeah. Final question. Shout out to everyone that's watching. What book would you recommend that I read and for the audience to take away? What's a good book? Bitcoin or not?
Yeah. Well, I got 66 books you should read, and they're all.
Do you want to send me?
No, 66 books in the Bible. Those are the most important things you can. If you just read the Bible and you just say, you know what, I want to learn about economics from this. I want to learn about running a business. I want to learn about being wise instead of being a fool. There are so many. Forget the kid stories. Forget the kid stories. There are so many lessons in the scriptures. So start there. Once you've done that, a great Bitcoin book that I recommend to everybody is Layered Money by Nick Bhatia. That is just a really good understanding of how a basic understanding of how our existing monetary system is structured, and then how Bitcoin can plug into that structure and replace U.S. Treasury collateral. That is one of the most. That is my thing. Bitcoin is evolving from digital gold to digital collateral. Right? It's being institutionalized right now as digital gold. But what comes next? We stay a step ahead of the mainstream narrative. Bitcoin is digital collateral, the most pristine form of collateral in the world. Why? Because it's equity based, because it's 24/7, 365 liquid, because it is the most pristine form of collateral in the world. And it doesn't matter what anybody else thinks. That's just the truth. Counterparty risk, all of this stuff is going to be mitigated with Bitcoin as the equity based layer for our financial system, rather than treasuries, which we see right now. Yeah, they work good when rates stay low because they're cheap and easy to settle, but they're so soft. The government can just create so much of them that there's inflation risk. Bitcoin gives you the best of both worlds. It's the hardest money to ever exist. It's finite. It's harder than gold, and it's Bitcoin. Treasuries can't even match to it. Treasuries are soft. They're the softest you can be. And then when it comes to settlement, well, gold was cheap and expensive to settle. It wasn't a good collateral. So the treasuries made that better. It was cheap and easy to settle. but you lost the hardness. With Bitcoin, you get the hardness and the cheap and easy, fast, secure settlement. It is the next evolution of finance, or as they say, it's the future of finance. And you can own your piece of it today for pennies on the dollar.
Yep. CJ, we're going to have to get you back on if you're up for it to talk about the digital collateral. That's a whole video in and of itself. May need to give ourselves a little bit more time. I think we could speak for like an hour, 2, 3 hours and just go deep down into the rabbit hole. Mate, it's been an absolute pleasure. Everyone that's watching the video or the replay, shout out to you. Have a very beautiful day. And thanks so much, man, for coming on. I'll put all your links below. It's been a real pleasure.
Yeah, thanks for having me. It has been a pleasure. And one last thing I'll leave everybody with. I hate threads on Twitter. So I've created rabbit holes. It's just quote tweet after quote tweet after quote tweet. So you'll go read one of my tweets. You'll end up like 6 or 7 tweets deep. And that's the best place to learn because I don't have to chop up the message and be short and cute and add pictures. It's long form after long form after long form, but it's the most important information that you need. And that is the best way to learn and to help your family members learn. So thank you, Sean, for everything you do. Good day. And I look forward to the next time I can come back.
G'day, mate. Can't wait. Cheers.